We're going to talk about Celsius, which, of course, still in the news. Alleged to be a Ponzi scheme from the Vermont regulators, saying that a lot of the deposits were paid to new customers in order to increase deposits on the exchange itself. Essentially saying, like, we don't have yield here, so we're going to have to pay out old customers with new customers' money. Classic Ponzi scheme situation. Adam, I'm going to give this one over to you. I think we've known this for a while, but to see someone like the Vermont regulators come out against this shows you that there's a little more teeth involved now, and people are really trying to go after Celsius in a way that we haven't seen to date. It's been a lot of allegations, but nothing so far that's going to go against them in court of law for the Ponzi scheme dynamic.
Well, I mean, these are still allegations. We should be clear. There's nothing that's been proven. This has not gone to trial yet. And really, that's the way that our system works, is that the assumption is innocence until proven guilty. But the reality is that things look very bad here. This very much does look like, again, like you look back at the DeFi sort of revolution, and Alex Mashinsky really played an important role in it. He was an important person. And I think that, again, the power that he wielded again, helped them grow fast and helped them grow beyond sort of what allowed them to become important in the beginning. And there becomes a certain point. This is not restricted to crypto markets. This is very common in financial markets. It's much easier to manage and invest $1 million than it is $1 billion, right? And once you get up to that $1 billion, level, and Celsius is far beyond that, you're effectively in a position where almost anything you do at size has the potential to move markets against you. And so, while in the early days when your volumes are relatively low, you can basically look around, be opportunistic, and scoop up lots of little opportunities that give you really great yield. That's something that becomes harder and harder and harder. That's why these projects wound up in large part in things like the Luna ecosystem that were essentially Ponzi schemes themselves. Designing and, again, alleged Ponzi schemes, essentially designing systems that push out far more value than they pull in a way that proved to be unsustainable, catastrophically so, which then compounds all of the problems for these bigger companies that are taking those bigger risks because they have no smaller risks to take that can still achieve the same types of yield. So it's sad for all of the people who are affected by this. It's a good lesson that if something seems like it's too good to be true, it probably is. And again, especially as these projects get big, the allegation, of course, that they were actually recycling money from new customers to pay old customers, that is a damning, that's a damning allegation. And to the extent that that's proven to be true, then I think that, we should see repercussions. We should see jail time. We should see this treated as every other Ponzi scheme should be. So I'm not particularly optimistic about that one based on current dynamics, but it's better to know the truth than it is to have it hidden under the rug. So I'm happy about that, at least. Wendy, what do you think?
I've got a little bit of money left on Celsius still. Well, it's not necessarily a little bit of money, and on Voyager too. But it is what it is. And I'm just kind of taking a step back and watching all of this stuff play out and trying to figure out what the next move is going to be, because I feel like the bankruptcy case is moving kind of slow. I feel like Voyager is doing a lot better job of getting their stuff together. And then it was also reported that Celsius found a couple $1 million extra to, keep them in operation. So I don't really have a big take on this story besides I just taking a step back and watching how things play out until we get more information, until we get like a receiver in there, until we get somebody from traditional finance, I guess, to come in that actually handles bankruptcy to be like, hey, where's this money? Where's this money? We need to do this. We need to do that. Because right now it's just, we're literally just waiting for the judge to give guidance. And that's all.
Yeah, one last thought on it. It's interesting looking at the timeline that they're laying out in the story. It looks back as far as July 2021, they didn't have funds in order to pay their customers. They were just using old funds from older customers to pay out yield, or getting in new clients and using that for yield. They didn't have yield. The market was drying up. If you even think back, that was our first dip during the bull market where Bitcoin went back down as low as like 28,000. I think it caught a lot of people flat-footed, including Celsius. And there's some more allegations in here about the Cell token, which is interesting, about how the Cell token was being pumped by insiders in order to increase the assets on the books of Celsius, which of course is pretty damning as well. I'm sure that will get a lot of different government agencies interested and involved, basically pushing up what they may see as an unregistered security. We don't know that. It'd be an allegation, and we could see what that happens in the future with that. But it does sort of bear some of those hallmarks, right? Where you have your own share that you issued yourself, and then you increase the price of it, and then you use it to make your firm look a little bit better than it is. Adam, to you.
Yeah, and the Celsius token, I think, is really worth thinking about, because the way that we value, like we talk about token value in terms of market capitalization. And what market capitalization means is you take the current price and then you multiply it by the total amount of supply that's out there, and bam, you've got something that on paper is worth billions and billions of dollars. In reality, that's not how markets work. And so one of the interesting things in Celsius's initial filing was that despite the fact that the Celsius token was valued at a fraction of the price, I believe they represented it as something that was worth $600 million, something like that, in terms of their stake in it. So again, that's valuing it by a market cap that didn't even exist at that point, but which they hope that they can sort of claw their way back to. And that's, I think, a dynamic that's very, 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 very dangerous with all of this stuff. It's important to know as an individual out there that the appearance of liquidity is very different from the actual reality of liquidity. And again, to the extent that that Celsius tried to sell half of the tokens that it had, it would in effect push the price significantly below, because there just isn't enough demand to support those types of buyers, certainly not at the prices that they believe that they could sell them at, or at least are representing that they could sell them at. So that's another important dynamic, is that even today, the all appearances is that the company is not being honest about what their book really looks like and about how much value really exists there. And I'm not that smart, and I know this. And so again, like, they definitely know this. So it just indicates to me that although they're saying things that are sort of conciliatory, in reality, they appear to be playing a version of the same game that they have been playing, it appears, for quite some time. So once again, be careful out there.
Not your keys, not your coins.